I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market remained under pressure for most of the past week as investors kept focus on energy and commodity prices and the tragedies coming out of Ukraine after the Russian invasion. U.S., they came out and blocked Russian energy, and oil prices soared early in the week, and that panic in light crude moved it up over $30 a barrel. The high energy prices sent travel and leisure stocks and hotel and gaming down big, and at the same time, panic into the dollar and gold and silver and nickel and so many other commodities saw prices just soar to the upside. Monday, the S&P 500 early was down 127 points, pretty much held those losses on the downside, and Tuesday, upside attempts failed. Midweek saw in advance as a 12-hour humanitarian ceasefire seemed to hold, and the big news was the UAE wanted to increase production, and they were going to try to influence OPEC to do so. Well, oil reversed to the downside, and the bottom pickers in stocks saw this opportunity and began to pick up some of those cheaper stocks. The S&P 500 quickly moved up over 100 points for those solid gains on Wednesday. Thursday, Amazon news came out. They were going to split the stock 20-for-1 and do a $10 billion buyback. That moved the stock up about 5% on that company's act of confidence. That 2,700 low that it hit, that was around our target on the downside. And we do think that for Amazon, that's going to be the bottom for a while. The CPI comes out up 7.9% year over year. That's a 40-year high. And stocks, which had got a little bit of an upside move on the Amazon news, moved down again. Didn't get any help from Apple, which fell quick, more than 4%, and then rebounded some as they came out and said they were going to stop all sales in Russia. Oil moved up again to about 115, but a quick reversal brought it back down to about 104. And that kind of volatility is what we've been seeing. That decline didn't really help the stock market on Thursday as it ended down about 60 points on the S&P 500. Friday, markets looked like they were going to come down pretty hard. Chinese tech stocks were getting hammered as news came out of some potential delisting here in the U.S. And the Hong Kong tech index was down nearly 9% at one point on Friday morning. But there was a reprieve for the stock market. A report came out that Putin said that there was positive movements in the talks with the Ukraine. I say bullcrap to that. He wants the heat off of them, and at the same time he's saying that bombs are flying into West Ukraine. And they're getting near the Polish border, and that has to be a big FU to NATO. And everything he says is a lie anyway. The stock market now really looks like it's in a period of opposing forces to me. The decline hit our targets, both in time and price. And the prices of stocks, well, they look cheap, and that does bring in bids. However, momentum is still strong to the downside, and background news is terrible. That brings a period of greater balance, actually. As things look cheap and our work shows a bottoming likely coming soon. And that probably means that we're going to see a trading range right now in stocks, and maybe a wide one, as you see volatility is very high, as the number of 2% moves in a single day up or down is just one shy of the total of 7 that we saw last year. So volatility is extremely high. This range that we're talking about, I'll discuss this more at the end of the show. But for a couple of weeks, I really think that the worst is over. We've seen probably the lowest we're going to see on that panic day back over a week ago. Don't hear that as a bullish comment. I said for months that 2022 would be a bear market year. Of course, we already have declines of over 20% in the NASDAQ and the Russell from peak to trough. And there's more of that to come. The average bear market falls over 30%. That usually lasts over a year. And that means that the bear that we're in right now is not half over. I do think, of course, and I've been saying that I think there's going to be a upward move into spring as these bottom pickers get some relief. But I do think that will be a big hook. Stocks now at midday here on Friday for the week. We'll call it mixed to lower. S&P 500, NASDAQ, the Dow down about 1.5% to 2%, but the Russell putting in a tiny little upside move for the week. Bond market, big downside reversal this week. The 30s moved down 4 points after having that panic gain the week before, and the 10-year yields gain about 26 basis points, edging back over the 2% level. Now, we have talked about that the bonds are in a bottoming process also, and have thought that the yields would peak ahead of the Fed. I still do think that, and I think we're going to see the bond market try the upside again over the next several weeks. Gold up about $8. It was up $100, just absolutely amazing, near the all-time high in that panic that came on the oil sanctions. Silver up about a quarter, 25 cents for the week. It was up $1.60. And that just shows you how the metals traders, they don't want to miss the upside when it comes. I still think that there's a consolidation period, and most of that is behind us with some breakouts that we see in the markets. But I think that into April, it's still going to be a struggle. And then sometime in the spring and summer, a giant upside move is what I'm looking for. Dollar still strong, gains about 0.2% on the week. And oil, those massive moves, making that high over $130 on the U.S. banning the Russian oil, falls all the way down to about 107, 108. That's down, about $7, $8 on the week in this absolutely wild week. Coming up, Arby is going to bring you a preview of our member video in stock sectors, where he's going to look at sector ETFs and give you a great example of our analysis there. I'm going to give you a great video. You're going to love this one. This is the battle of the indexes. I'm going to show you the death cross on the QQQ, which I've gotten emails on, and compare that use of that 50 to 200 moving average, which everybody uses, against the slim ribbon. And I want you to see which is a better indicator. Matt is going to walk you through the askSlim free content that you can get with our popular services preview. Gives you a great little piece here with some good examples of what you get in this preview for the next couple weeks at no cost to you with no credit card. So you got to see that. And then I'm going to take you through the stock market analysis for the coming several weeks. I think you're going to find that all incredibly interesting. Please do go to askSlim.com and explore the site. If you're new, you can become a free member or sign up for our popular services preview, which is right on the top of the main page. On YouTube, do subscribe to our channel. Click that notification bell and you'll know when we put up videos. And give us a thumbs up that you like this video. On Twitter, follow us at askSlim. And questions on our memberships, the specials we're going to offer you, anything on our huge offerings of educational and analysis, write to Matt at askSlim.com. All right, here is a preview of our stock sectors member video. This is a video that's available to level 2, 3, and 4 and is in our library of more than 600 videos that we have in there, and 10 different categories of videos. And he's going to show you Our sector ETF analysis does a fantastic job on this, and give you the example looking at XLB.
So this is the XLB, and what we see here is a dominant cycle, which is broken up into minor thirds that you see right there. And we are looking for a bottom to form here in the XLB. There's a key low due 124 to 314. You can see the top holdings here as of 12/9, and we're looking for this to get a rally back up as we're entering into a time period where the dominant cycle will be rising with the minor cycle, and this is a more positive time period. Let's highlight the recent history here. We had the dominant cycle rising as well as the minor cycle rising, and you can see the rally. We had the dominant cycle rising as well as the minor cycle, and you can see the rally. We had the dominant cycle rising as well as the minor, and you can see the rally, and so on and so forth. Each of these cycles had the dominant rising as well as the minor, and it led to really solid rallies on the upside in each of those cases. So let's see what happens right here. The odds do favor a rally given everything that we are looking at in the XLB.
I hope you love that analysis. Absolute great work that we always see from RV. This is going to be incredibly interesting. The death across in the QQQ and the golden cross that happens often. And we're going to look at the daily 50, 200 moving averages versus the weekly slim ribbon. And the winner is, well, I'll let you be the judge. Of course, I'll be a judge also as I bring you, I think, what is a very interesting piece. This is the QQQ, and I'm showing it to you two different ways. The one on the left is the way that, well, has been around for decades and decades, where you look at a daily and two moving averages in here, which are the 50 and the 200. And I've gotten lots and lots of emails about the death cross here in the QQQ that occurred on March 1st. Of course, the question is that valuable to you? Is that the kind of information you want? Is it fast enough, and is it consistent enough? Do you know what to do once you get a death cross? Here, well, I'm going to compare that to the a 2-year weekly in the NASDAQ. So we're looking at QQQ 2-year, a QQQ 2-year, that's a daily and that's a weekly, using the slim ribbon and the slim ribbon PO on the bottom, which gives you very different signals. The slim ribbon shows momentum signals. It has colored bars that show momentum direction. So you'll notice all the bars are green on the way up in here, and they're either green hollow or green solid in the candlesticks, and that tells you the momentum is strong. When it turns blue, there's a little downside blue arrow there, it tells you momentum has neutralized. And then when it turns red and the bars go red, it tells you momentum is negative. So on the bottom is the slim ribbon PO, which is a signal indicator for the slim ribbon. And that you can see that it gives you continued signals in there of a momentum and momentum resumptions. When it's green with green arrows, it's telling you momentum resumptions, giving you a sense of direction, as you can see. Also, the slim ribbon often is support area and often is a resistance area, as you can see right in here. So let's just compare the QQQ versus looking here at the death cross here on the 50-200 versus the slim ribbon. And you can see that the death cross comes on March 1st, and you can see right over here there was a signal that positive momentum was lost on January 17th, and the negative momentum signals came on February 14th. It is typical that signals come much earlier, 2 to 4 weeks faster, using the slim ribbon and these indicators instead of using the 50 and 200. So I'm going to show you some examples of that as we move forward. Here was a false signal right over here on the downside. And then right over here on about May 18th, you got a upside cross right over there. And here on April 27th, 3 weeks earlier, you got the upside green color right here in that little green arrow that you see. That's 3 weeks earlier on the upside. Also, this didn't really give you any idea of where the supports were looking at that, like the slim ribbon did. And it also didn't give you any idea of whether the momentum was going to continue like the slim ribbon PO did. So you can see this is a great example right here of why this is such a good indicator. So let's just look at a few other symbols in here and you can get a sense for what I'm talking about. Let's look at the Dow Jones Industrial Average, DJI. And you'll see here as we look at the DJI that here's your positive signal right there on the golden cross, as you see, as it moves up right over here. That's on 8/4. The positive signal comes on 7/13. On the slim ribbon weekly, that's 3 weeks ahead. Here, your negative signal came on March 9th. On the Dow Jones, it just came 2 days ago. The negative signal came right over here on February 21st. So again, we're looking at about 3 weeks ahead when you look at the slim ribbon. Let's continue to analyze this. Let's just look at the spider, SPY. I've gotten some emails that said, and I saw some articles that said that we're about to get a death cross in the SPY. Let's just bring this in right over here and bring this in right here. And you can see that death cross just about to happen right now. Of course, the slim ribbon on the weekly gave you a neutral signal here on January 24th and a bearish signal right over here on February 21st. So this again is 3 to 5 weeks ahead. And now what are you going to do when you get this signal right over here? The market's already down. Well, you don't really know, and when you look here at the slim ribbon PO, it was positive with upside signals this whole way as the slim ribbon remained in a positive configuration, and then it turned neutral. This went blue, and you can see it is red right over here, well in advance of this turning red. So good example there when you look at the SPY. Let's take a look at the dollar sign DXY, looking at this, and you can see on the dollar, this right over here, we got to go way, well, let's look at this first here. This was your death cross right here that occurred on July 7th. This was June 8th. That was a month in advance on the death cross. Here's your golden cross right over here on 7/28. And here's your bullish signal right over here on 7/5. So that was 3 weeks in advance. Looking at the dollar. We'll look at a couple more here just so you get an idea. We'll look at some commodities. How about /PL? We'll look at platinum since there's so many people watching that. You can see right over here that a golden cross occurred right at the peak, way up over there. You can see that back 2 days ago on March 9th. And looking right over here, the positive signal comes right there. Which is on February 21st. So again, you get an idea of how much ahead this one is. One more we'll look at, which is /ZS. We'll look at the soybean market, which has been super strong. And I put in some colored boxes in here to show you that this is where the death cross occurred right over here. Right at that point. This came about 2 weeks earlier right there. It stayed negative, of course, until the golden cross right over here that occurred on February 10th. And the price on February 10th was right over here. It closed at 1573. Here's your bullish price right over here, which is about, 5 weeks earlier at a closing price on the week of right around $14, so well below where this signal came over here. Earlier by a couple of weeks, And you can see in here how the Slim Ribbon PO was giving you those beautiful upside signals. Here's where it turned green again at this point right there, and is solid green and likely to give you another upside signal somewhere over there. So you get a good sense looking at this that the Slim Ribbon is just absolutely incredible. The Slim Ribbon offers faster signals and support resistance. The signals come 2 to 4 weeks ahead of the 50-200 day, the Death Cross or the Golden Cross. Both indicators, they chop at times, and when the Slim Ribbon goes flat, it's lower confidence, and it shows you no momentum is really being established, and sometimes it gets choppy then. But the winner, clearly, when you look at this, by a knockout, is the Slim Ribbon. Clearly, thank you to that Harlem Globetrotter player that is showing you it's almost no contest when you look at that. Why would you ever use the 50-200 when you can use the weekly Slim Ribbon? You can get that weekly Slim Ribbon just simply by going to askSlim.com, go to the top of the page, resources, and you can download that for the Thinkorswim platform. And if you don't have a Thinkorswim account, please do sign up through our website. Just go to the right on the carousel on the main page, and you can click on the TD Ameritrade. That's our preferred broker, and sign up for a Thinkorswim account. You want to mimic that, you can use the 8, 13, 21 exponential moving average. It just won't give you all the signals that we have. The Slim Ribbon PO is a proprietary indicator only available to our level 4 members. So you might want to become a level 4 or level 4 plus members. That's it, looking at that battle, and clearly the winner is the Slim Ribbon by a knockout. All right, coming up, stock market analysis. But first, Matt is going to introduce to you the free access to askSlim's most popular services. This is the stuff that our members love and use, and you're going to be able, if you sign up right now, to get this for a couple of weeks.
Hello, fellow traders and technical analysts. This is Matt with askSlim. Now is the best time to check out what's happening at askSlim. We are in the midst of our once-a-year premium services preview, where we hold an open house and offer free access to some of our most popular premium services. Just go to askSlim.com and click on the Sign Up Now button on the top right of the home page. No credit card is required. The askSlim PSP features an opportunity to access world-class, unbiased technical analysis, cutting-edge trade planning tools. You can connect and learn from a dedicated analyst team, all trained by Slim. You receive professional-grade trader education inspired by Slim's 6 decades of trading experience as a floor trader and screen trader. Our methodology supports most trading styles, including intraday short-term and multi-week swing trading. Let's take a quick look at some of the impressive services you will have an opportunity to utilize during this time. The askSlim SIR Intraday Grid Live Daily Chart Stream. This is broadcasted on a daily basis from market open to market close. It is designed for intraday traders and delivers key insights into primary intraday momentum, key support and resistance zones, and high probability acceleration zones for the S&P 500, the NASDAQ 100, and the Russell 2000. Next, we'll take a look at the askSlim S&P 500 multi-time frame chart stream. This is where you can learn how to apply our suite of custom indicators at multiple time frames to assist with determining directional bias, catching changes in directional bias, monitoring for extreme conditions, following momentum divergences, and identifying favorable trade setup conditions. We have a glossary and usability guides that are included, which go into deep detail around our custom indicator studies and also suggested guidelines and best practices for this service. Next, we'll look at our askSlim trade ideas. Trade ideas are specifically designed to support your trade planning. We believe trade planning should be a critical part of a trader's process. For this reason, each trade idea is accompanied by our custom weekly and daily charts and includes a template including many of the most essential components of a trade plan. Each trade idea will highlight favorable entry ranges, target zones, and suggested price levels where the idea would likely need to be reevaluated. And finally, I wanted to highlight our new askSlim cycle timing service, which is now in beta. We're really excited about launching this new service. Our askSlim methodology is a unique technical style that blends cycle analysis, momentum analysis, and swing high, swing low techniques. Because of this analysis, we are able to offer projections not only in time and price, but also in direction. Being able to project in time is a core aspect of our cycle analysis and the askSlim methodology. Finding and timing the next key low is, as everyone knows, no easy task. With the askSlim cycle low timing service, we increase those odds greatly. There are often opportunities surrounding the bottoming of cycles as well as the nesting of cycles of different time frames. Our new cycle low timing service is an essential tool in the askSlim arsenal, and it's designed to help our members identify and manage the risks and opportunities associated with lows that happen. That's all I have for today. Make sure to go to askSlim.com and sign up for our once a year premium services open house preview. I'm going to bring over the home page right here. You can click on this green button to sign up, learn more about all the various services that are available. And once you feel like you're ready to go, just click on the sign up now button, and that'll take you to the form that you fill out. There is no credit card required. That's all I have for today again, and I wish everyone all the best and great trading.
Great work showing that, Matt. And again, here is the full list of content that you're going to get just by going to the askSlim site and signing up for free. All right, stock market. We're going to look at the stock market, look at the SPY for the next few weeks. But first, I want to give you a brief replay from February 25th. That was 2 weeks ago, where I did a lesson in cycle analysis and did some projections on the stock market. I want you to see that again, and then I'll pick it up after that and show you the present analysis, which takes it from the point that I projected to 2 weeks ago. Take a look here as I'll move over to SPY. Now, what I want you to see here is this is of course, a candlestick chart. And on here we have a couple of indicators. This is the slim ribbon right over here. This is the slim ribbon PO, which is the signal indicator for the slim ribbon. The slim ribbon right now is showing you a negative condition, as it actually has basically since here it neutralized for a day and then turned negative again. And now you're getting this big rebound in here. And right now you can see it is still red and likely to turn down. But we're going to take a little deeper look at this analysis. What I want you to see here is that head and shoulders right there that actually signaled the top of the market in the SPY. This again is a daily chart of SPY, and we're going to go through the different steps in here of this analysis. So right now you can see that head and shoulders, and you can see that the momentum is actually negative. Let's take the next step in here, and we'll put in our cycle brackets, because these are our guides essentially to the cycles in the market. These brackets are called our drawing tool, called cycle brackets, and you can see there's a minor one right in here and a dominant one right here, and each of these is called a harmonic family made up of these minor thirds and the dominant cycle. And what we see is that when we get into the period where they're kind of nesting, there's a decline, and then you come out of the nest and there's an advance. Now you see these 1, 2, 3 cycles right in here. Well, this is how they actually formed, and you can see how that makes a head and shoulders. When this dominant pressure right over here is strong, it prevents this rally right here from making a higher high, and then it creates the head and shoulders. So that's just a little basic lesson in here. And you can see that there are 1, 2, 3 cycles in this big family right here, and 1, 2, 3 right over here, and here only 1 and 2. That is suggestive that you're going to see a failure of this rally at some point, and then moving down one more time. Now, this was a panic low right over here, and that came down and hit some important numbers, as I'll show you. And then you get this very significant rebound in here, and it's moving up into the slim ribbon. Now, often the slim ribbon is support or resistance, and this, in this case, it got a little through it and came down again, and now getting back up to it right over here. And this rally is likely going to fail and then get one more move to the downside right there. Let's take another look at it as we look at things a little more with a little more depth. And you can see in here those periods of risk. In other words, those periods where this nesting cycle comes in right here, and that you get your bigger declines, like the end of it there and there and there, and that would put you out over here. That means that the people that are buying right over here are likely buying premature. We had talked about a low sometime beginning in mid-March, and that's what this comes out to, sometime here. So after this rally is over, you enter into this period of risk and the next move to the downside. Now let's take one more look in here at a fully developed cycle chart with our analysis and projections, and you can see that right here. So we're looking at the reality of how the big harmonic family right in here traded, as you can see right there, makes a double top, does this, makes that head and shoulders that we talked about, hits resistance, falls off, has a rally to resistance, a sell zone, falls off, and then this last rally coming back up to the sell zone. Some important numbers as we look at this, and I'll advance it right there. The intermediate charts off the weekly have resistance, as you can see it getting right up here. The top of the minor resistance right there is at about 440. This right over here is at about 437. So you can see it's getting up towards that right now, and then likely to fall off for one more decline. Now, this is actually an important low. It stopped very much on this weekly support right over there and had this rebound. So maybe this period is only a test of that low, and then a significant declining phase that we had talked about for so long will be over with. Okay, now that you've seen that, let's go back to the SPY and look at the short-term view for the next few weeks, and what I consider to be a bottoming process in the market. So let's switch over here. I have soybeans up from that previous illustration, and we're going to go to the SPY, and I'm going to blow this up and switch this over to that last bit of analysis that we did right over here. So what I want to show you is that, when we had talked about the stock market, whoops, that's not the one I want to go to. Here it is right here. That was the weekly. Here it is right here. So when we had talked about that analysis back over here, we thought that, this big panic over here would be tested and the market would come down again. It got closer on the NASDAQ, and then is trying to move up again. So you'll note the green arrows that I have in here. These green arrows are the rising phases right in here on these big cycles. Now, if you're new to the cycle analysis, what I showed you in that replay might have been startling to you. But our members all are accustomed to this. And here we've gotten past this period of risk right in here and into what I consider to be the next rising phase, as you can see. But rising phases, when you get into markets that have negative momentum, and you can see the slim ribbon here, and on our weekly chart, we use the reversal scout also, and that one is in negative momentum. You get failures in the sell zones, and you got that right over here, and that's still a sell zone right there. Now, we have changed the harmonics slightly as this began to narrow. The harmonics were showing 12, 24, and 36 days, but they've tightened up a little bit now. That's very common to 11, 22, and 33 days. And now what we're looking at is our expected range right in here, which is the resistances right up over here, 1440, 1440, I'm sorry, 440, 445, and the supports down over here, which is around 420-ish, not quite getting down to these lows. So we expect that to be the range, but rallies are going to have a hard time holding with the negative momentum in all time frames in here. Still, we're in this area of this upside potential move. So we're looking for a move into the late portion of March right over here. If the market happens to sell off hard over the next couple of days and test this again, that doesn't change this analysis. All it does is put it out a day or so, because you can see these blue lines. That's the variance of the timing on the bottom. So we believe we're in a short-term bottoming period, and that it will overall, though I think very choppy and very wide swings, try to get up into these upper levels right over there, and then begin to move to the downside. And this period out over here into April is a lot of risk again, and there's a potential that this low right over here will be taken out very significantly, getting below the 400 area in the SPY. So that's the potential. If this cycle in here forms positively, in other words, it doesn't take out this low, it rallies and comes down and doesn't take out the low, that confirms that the intermediate bottom is in place. So this adds to the analysis that I did in that replay, came down and tested as expected in this bottoming area right over here. So we're in the bottoming phase right now, and Katie, who's in charge of our cycle bottom information, I'm sure is posting in here that we're in a bottoming area right now in this, and this is a place where what happens is that when you get here, often the velocity slows down. In other words, as you get in here, the movement starts to get more narrow, and then eventually, like you see right in here, a few days where it kind of gave you a cluster here, or a few days right over here, and then all of a sudden it starts to turn up. So that's what I would expect, kind of clustering right in here, and then trying the upside again. Right now you can see today it's moving down as the news that came out that moved the market up in the morning, that Putin said there were positive talk, that it had some positive momentum in their conversations between the Russians and Ukraine, but that's a bunch of hooey, and he's just trying to make himself look better because he's under a ton of heat. So the market's turning down again, but I really believe it's going to be kind of dancing around right in here and be in that range, 420-ish on the bottom, 440-ish, 445 maybe up in the top here into the next couple of weeks. And then that bigger risk area over there begins to come in, and we're just going to duplicate that. It's kind of out over here somewhere where that next period of risk is right there. So we'll be looking for the downward momentum to keep the upside from getting very far. The bottom pickers and those people that are, looking at these cheap prices to be looking to buy the dips, and that probably makes two-sided trade for the next couple of weeks with a good potential for traders, as long as you give the moves a wide enough berth so that you don't buy too soon or sell too soon in this pretty wide range of more than 200 points in the S&P 500 if you trade SPX or ES. Kind of what we're looking at getting into this period of rally. This is a likely temporary, as we still don't think that the ultimate low in the market comes until summer or fall, and that all of the upside attempts will simply be false. That is a look. I thought at this. I hope that you really thought that replay was very valuable to you. I'm sure a lot of people didn't see that, and I wanted to bring it back because there was such a good teaching piece in there, and then look at what we're looking forward from that point. And you get a good idea of the structures here in the cycle analysis. Remember that it's what we call the heartbeat of the market. It's really money flow looked at in a visual way, and you can see the rhythms in here are quite clear. Now, there are often shifts, movements, and our job at analysts to adapt to those. None of this is written in stone, and we're always reviewing, always. As you see, we have 4 analysts that do this on over 400 symbols, And I think we bring some of the best content around. Go back and look at the PSP, our Popular Services Preview that Matt brought, and you're going to see great stuff that you can have at no cost right now with no credit card for 2 weeks. Go sign up for that. On YouTube, subscribe to our channel, like this video, give it a thumbs up, and watch some of our other member videos in the playlist. Twitter, follow us at askSlim, and questions on anything you saw on here, write to Matt at askSlim.com, and he will give you some great stuff. I hope you found this to be incredibly, incredibly valuable. Your success is our success. We want you to be so careful out there. It is so crazy. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.